Good morning, folks, and welcome back to Almus Market Mornings. We have discussed multiple times on the 3D chess of geopolitics, but there are also chess being played between the Fed and the US government. President Trump released a letter which is essentially removing Governor Cook from her position due to an alleged mortgage fraud. Now, I guess she will be taking legal recourse, but this is another seat which is now empty. Cook's term as governor only ends in 2028, I think. For India, we are fast approaching the deadline on the additional 25% tariffs being imposed for the purchase of Russian oil. As of now, there is no respite or updates on the negotiations that may have taken place, and looks like it will be imposed. Good morning, Jackie. Your thoughts on these major developments? No respite for India on the tariffs. Do we expect anything to materialize soon?
Good morning, Swaraj. No, in fact, there is a news out that the Homeland Security Department of the US has already issued a notice to implement a 50% tariff on all Indian imports. And that has been signed by Trump in an executive order. Uh, no, while we don't have signs that the Ukraine war is ending or a ceasefire is on the cards, this is likely to continue for some time. And the longer it continues, the bigger the problem as far as India is concerned, because any countermeasures we take for helping the economy or the exporters will take time to take effect. On the other news, yes, Lisa Cook has been removed. I think they have already issued communication to this effect. And it's not just about the charges, it's also about the government's attack on the central bank's independence that has been in the air for quite some time. This is also a part of that move to have doors on the board of Fed and to get the interest rate cuts that they are looking to get. And of course, Cook has already posted that she would be challenging them in the courts, federal court, and eventually even the Supreme Court. This is an ongoing story. But I think it kind of establishes that now we will have more, as you said, more doors on the board. Now, in yesterday, London market was closed, so markets were kind of not very active, but bonds were clearly showing some reversal of the gains. Most of the markets were actually showing the reversal of gains, like euro fell almost one big figure. And then dollar index also rose. Bond yields slightly went up. There is some more voices expressing surprise at the way Powell has mm, taken a turn in his stance, and also with many members on the board still cautious about a rate cut. It's not a done deal that we'll have a rate cut in September. That is also being now factored into the market. That's why yields slightly went up, particularly in the short end yield, which had which had fallen quite a bit on Friday, actually reversed by about 4 basis points. We should be seeing limited downside for the yields immediately. Also considering the fact that Treasury will be issuing as much as 183 billion of new issuances in the coming week. So not much downside can be expected as far as the Treasury yields are concerned. In the meantime, quite a few interesting developments have been, cited. There is a political turmoil building in France. The Prime Minister has called for a confidence vote on September 8th, staking his survival in view of his unpopular fiscal plan aimed at resurrecting France's public finances. Should the vote fail, there will be another snap poll in France. So another bout of political uncertainty. This is what the euro tried to price in yesterday by falling almost to 1% from the peak. Another interesting piece has been the one of the prominent economists in UK. He warns that UK may be approaching a 1976 style economic crisis driven by massive fiscal imbalance, and maybe they will approach IMF bailout. So, yeah, well, this is not a news, not an official news, but then it highlights the kind of fiscal situation that the UK is also in, and US is not alone in that zone. and perhaps one of the rare occasions of a frontline developed country facing such a crisis. So that's something to be on, be aware of, that something will be cooking at some point of time. There's also a development where U.S. government has taken a stake of 10% in the Intel, the chip making company. It's stated to be a part of the Chips and Science Act support program, because the company itself has been in kind of a trouble. However, it's also been not seen as a very good measure, because such takeover has happened only once, when there was global financial crisis, where Treasury took stake in the banks which were in trouble. So it could be seen as an official intervention, perhaps, and not a very good news as far as the corporate America is concerned. Again, another interesting development yesterday was the Chinese central bank fixing the central rate of Yuan at a 9-month high of 7.1161. And that was about more than 400 pips stronger than what the market was expecting, notwithstanding the fact that dollar had fallen overnight after Powell's statement, but the fixing was much, much stronger. And since then, the offshore Yuan as well as onshore Yuan have actually gained much more than what we usually see in vis-a-vis the euro. And definitely, if you compare the rate of Chinese yuan fixing when last euro was at 1.1830, fixing was at 7.1534, and yesterday when euro was at 1.17, we are seeing the fixing at 7.11. Something might be different now, definitely. We'll have to wait and see if this become a kind of trend of is allowing yuan to strengthen, maybe some a part of a deal with the US, in who is looking to address their trade balance by weakening the dollar also. Stock markets gave up partially their gains of Friday. Of course, they are looking forward to a very key event of NVIDIA's results tomorrow. And NVIDIA is one of the, it makes up 8% of the S&P 500 market cap, and its result will be a crucial test for the tech sector and also the AI companies. Finally, India yields have also been rising now. Indian 10-year yields are about 40 basis points higher from the low that it was seen. And interestingly, the yields have risen even as RBI has cut the official repo rate by 100 basis points in the last 4 months. And again, this rise in the yield has been a recent phenomenon after indications that there will be a cut in GST rates, there will be fiscal support for the export sector, and more could be on the way. So expectation that our fiscal deficit can worsen by about 0.2 to 0.3%, and government could be approaching for more borrowings than it was planned. So a lot of things on the radar, not something that affects the currencies directly, but definitely, as I shared yesterday, Powell's statement was not a game changer as far as the markets are concerned, because markets are by and large discounted, have been expecting a rate cut. In fact, they were discounted about more than 2 cuts this year. So the dollar did not really make any new low. Rather, it was well resisted, or rather, it was well supported on the dips, and that's what we saw. And as far as dollar rupee is concerned, once again, as we shared, it's difficult to see it again because of the different type of challenges that Indian economy is facing because of the higher tariff. And now that the 50% has become a reality from tomorrow, I think market will be very. I mean, very much biddish as far as the USD INR is concerned. Any up move can only be stalled with selling from RBI, who will be looking to contain any weakness. We have more updates on economy in the coming days, particularly the US economy, PCE inflation and GDP. And next week we have the all important non-farm payroll, which in my view is probably going to decide whether we have a rate cut in September or not. So while it was a quiet day in terms of economic news and major currency moves, I think a lot of things are building up, and I think once we have these economic numbers, we'll have a probably a trendy move developing in the currencies. Thank you.
Thank you, JK. And I think rightly put, we have a lot of things developing. Uh, First, I think the point you touched upon, Homeland Security, which has released a document on the implementation of additional tariffs on India, that's sort of confirms that we will have these additional tariffs from 27th or 28th. The 27th, na, JK?
It's
The
27. Yes,
yeah,
tomorrow.
tomorrow. Then we had the news about Lisa Cook being removed, and she will be taking the legal recourse. But as of now, one more seat for the government to fill, and maybe another dove will be in place. Uh, Treasury will be issuing 183 billion of new paper this week, and that has kept yields somewhat steady. Uh, Markets somewhat still don't seem very confident on a September rate cut, as other Fed members, they still remain cautious, even though Powell sort of turned, but there are still other Fed members who remain cautious. There is a political turmoil which is building in France. There is a confidence poll which is scheduled for September 8th, and Euro took a tumble of around 1%. Interestingly, the fixing of Yuan was much stronger yesterday. That's something to watch out for. Maybe that is part of some trade deal. Rupee has remained weaker, but interestingly, the Indian yields have also been rising. The 10-year yield is above up 40 basis points from its lows. Uh, it's mainly due to the additional fiscal support for the economy which the government is planning to provide, and that might lead to higher deficit than what was projected in the budget. That's it from us today. Thanks for listening. We'll catch up tomorrow with the fresh round of updates from the financial markets.